Alright, so this video is going to be the weekly forecast for next week for the S&P and Nasdaq futures. Starting off, this is the monthly chart, and I want to annotate this down close candle here, and for Nasdaq, this down close candle here. Notice how we have reacted off from the 50% and the 75% for S&P and Nasdaq respectively. So because we have traded all the way down into these two levels here for ES and Nasdaq, I think this bullish on the block is not that bullish after all. Because if it is really bullish, you don't even want to see the 50% to be traded too. And Nasdaq, obviously it's even worse, is trading towards the 75% of this down close candle. We will be approaching the second week of August, and for the news driver, we are going to have CPI on Wednesday. Heading down lower into the weekly chart, we have this out close candle. As I've mentioned last week, we are probably not going to get another down close candle because we usually don't get big range down close candles for more than 3 weeks in a row. So over here, it's not bad that I managed to get the analysis correct once again, right? But anyways, moving forward, we have this fair value gap here. This is a weekly fair value gap. And over here for Nasdaq, now Nasdaq, it's way above here. I don't think it's going to reach into this level, but you got to remember that it's CPI, so price can just overextend if they choose to do so. What do you mean? Because for CPI, most likely and most of the times, it's manual interventions. So they are going to push the buttons manually, and price will not respect the algorithm, right? So they're going to alter the algorithm a little bit, usually for CPI. Okay, how far should I expect NQ to trade up into if I want to see it remain bearish? I would like to see this discount week, the consequent encroachment of it, hold the price. Okay, so the furthest that I really want to see it trade to is the consequent encroachment, 50% of this wick down here. Okay, for ES, I don't really want to see it trade above 50% of this fair value gap. Okay, worst come to worst, this is similar to NQ. This would be the maximum allowance that I would give for price to trade up into before the next distribution lower. So I am still bearish for next week, and I am assuming that price for ES, we are going to gravitate to this relative equal lows down here. And for NQ, we might want to take out this low right here, or we can trade back into this old fair value gap, because this fair value gap is below this swing low. This swing low here is your low hanging fruit. And NQ, it's more bearish than ES, which is why I have lower targets for NQ. Let's look at what we have on the daily time frame. So as you can see right here, both the levels that I have marked out on the weekly chart that I would wish for price to be kept at is within this daily up close candle. So it is their respective bearish order blocks. And for ES, you can see that the 50% is very near to this volume imbalance on the daily time frame. So what I would want to see is, best case scenario, we don't get any daily close above this fair value gap, consequent encroachment. Best case scenario, right? We can wick above, but I don't really want to see a closing price above. That is your soft invalidation, right? The strongest invalidation would be if price is closing above this volume imbalance here, which comes in around 5,471.25. If you see any daily candle closing above this, we are most likely going to run these highs. You with me? Okay, that is for ES. And similar to NQ, because NQ is really, it's relatively near to its order block right now, so I'm gonna use 50% of the order block on a closing basis on the daily chart as my gauge of strength. So if I see any good daily close above 50% of this up close candle, these highs are next, these two highs here, into this old inefficiency that was untapped. But I don't think price is going to go there, but it's just that in an event we get a daily close above 50%, that is where it's going to go. Alright, I am still leaning bearish for next week. I'm just giving you two directions that price can move to, and I'm going to give you my bias next. So what I think is going to happen next week is, because for CPI we have no idea where they're going to push, so we have to rely on Tuesday. On Tuesday there is a high impact news driver. So if we get a manipulation higher on Tuesday relative to the opening range, opening price of the weekly candle, okay, so which means once the market open at Sunday's 6 p.m. New York local time, if we get a manipulation, which means like a spike up or a expansion above the weekly open on Tuesday, I am going to anticipate that as your Judas swing. So it's like a false move. And then for Wednesday CPI, we are going to distribute and expand lower. Thursday would be the continuation of Wednesday's price action. And Friday, we are probably going to trade even lower, and then we're gonna probably get a TGIF setup if on Wednesday and Thursday it has been falling. So let's just say I'm gonna map out what's gonna happen. Okay, so maybe on Monday we gap higher, and then on Tuesday we take out Monday's high with energy, right, to bait all the traders in that the bottom is in. And then we're gonna reverse on Tuesday, and then CPI, maybe we take out Tuesday's high for one of the assets, Okay, it can do something like this, like a second manipulation, and then we trade lower all the way from CPI into Thursday and into Friday, lower and lower and lower all the way down here. And once we take out this swing lows or we trade into the rejection block, I am expecting TGIF, and that is going to be on Friday. Okay, so that is my bias moving into next week, right? That is one scenario. Second scenario is that we have a very clean price action, which means we open up on Monday, we take out Monday's high on Tuesday, trading up into this up close candle, and then we straight away reverse, and CPI we trade up into a breaker or a bearish order block on the low time frames. This is CPI, and then we dropped immediately with a large range candle, and then on Wednesday continuation of on Thursday we get the continuation of Wednesday, and then Friday, which means we would be attacking the objective on Thursday. Okay, and then Friday you get the retracement to close out the week. So this is what I'm expecting. Okay, we are probably going to see some form of SMT. That's a very it's highly likely to happen that we're going to get SMT. So if it does not provide a daily SMT, which means this swing high is intact, then we would have to go down to the lower time frames, maybe 6 hours or 4 hours time frame, to look for SMT, or maybe even the 1 hour time frame to look for SMT, and then that is where we will look for price to reverse. So SMT is going to form either on Tuesday and Wednesday. That one I can't tell you for this week because CPI, it's highly manipulated. Okay, so it's better to wait for CPI to happen and then trade after CPI, because after CPI you will most likely know where the market's gonna go. But for me, myself, my bias is the market is probably going to go lower. Okay, so that's for next week, and yeah, that's pretty much it for the weekly forecast. I hope you enjoyed it, and I will see you again. I'll talk to you again. All right, good luck trading. The volatility has been quite a ride, and so far I've been enjoying it because it's been a while since we have such a volatility during the intraday. Right, look at the ranges of this candle as compared to the ranges over here. They are smaller, right? So yeah, good luck trading and don't get burned, and I'll see you again. I'll talk to you again.